My name is Hunter Smith with MetaStock, and I want to welcome you to this webinar with Mr. Marc Belnick, a quantum leap in securities investment and methodology. We're very excited to have him here this afternoon to discuss his different methodologies, also his little bit about his add-on with us that is currently available in MetaStock. Before we get too far into it, though, as always, we do need to read our disclaimer. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or information provided in connection with the company. Now, a little bit about Mr. Marc Belnick. I've actually had the pleasure of working with him for quite some time now. He's actually been involved with global equities and derivative markets for about 3 decades, using fundamental and money management and technical trading systems. After receiving a degree in computer data processing from Wits Technikon in Johannesburg, Marc founded his share market profile portfolio management company. Now, in '98, he relocated to Australia and has since been involved in the equities and derivatives market, trading and investing on a full-time basis. He has completed the Johannesburg Stock Exchange membership exams and received a diploma of financial planning. Marc actually purchased his first MetaStock charting software package back in '95, and he's been using MetaStock ever since, and we're excited to have him, and started working with him a little while back in implementing his system within MetaStock, and so far it's been a very, very great success. So I'm excited to have him here today. Marc, are you there?
Thank you, Hunter, for that introduction. So we're just going to kick off, and the format of the webinar is going to be that I'm going to go through the system and explain the system, and then we'll get into the juicy parts, which is some profit and loss Excel spreadsheets on the trading and investing, so you can see what would have happened using the actual add-on. And I want to show you how to identify a trading market so you know when to invest. And then we'll do some different investment strategies to suit your risk-return profile and investment preferences, and some summary slides. Then we'll do some useful information and some fun. Now, on the bottom right-hand side, you will see that there's a slide number, and if I can suggest that we keep all questions to the end, because a lot of the questions will be actually answered during the webinar. And let me just go one step back and thank you guys for attending, and welcome to all our global viewers. So what is and how does Marc Belnick's Bullish-Buy and Bearish-Sell work? It is a pure technical trading system based on trend analysis and volatility, integrated with effective money management rules. Now, it's extremely important to know that the money management rules that are integrated make the system stand out and give it powerful, techniques, and empower you to achieve very, very favorable risk-adjusted returns. The system presents long and short sell signals when applicable, so you can go short even if you don't want to hedge. Now, the whole thing with any security at any time on any exchange is, do I buy, short, sell, when do I buy, how much do I buy, when do I exit, when do I add to my existing positions. So the way the Marc Belnick Bullish-Buy and Bearish-Sell system works is that there are 3 different signals. There's a short-term signal, there's a medium-term signal, and there's a long-term signal. Now, if you've got a portfolio of $100,000 and you divide that up into 10 securities, and you've then $10,000 security allocation for each security, So for your short-term signal, you would then invest 17% or $1,700 when the short-term signal presents itself, and $3,300 or 33% for a medium-term signal, and 50% for a long-term signal. Then, so let's start off by looking at number one. That first of tells you the long-term trend status. The long-term trend status is bullish, as shown by the trend ribbon and the corner expert symbol. You only want to buy or go long when it's bullish. So here, for example, you would be at number 2. There is a Facebook buy, a long-term buy signal, and there you would buy $5,000 worth, or 50% of your security allocation. Now, when would you be able to add to, sorry, God, let me just fix this up, get this pointer. Right, that's better. So when would you actually be able to add to additional positions? Well, once you've got a long-term buy signal, which I'll show you later in an example in the Expert Advisor, there's an initial profit target. Now, the initial profit target is where you would sell 50% of your position. So, for example, our initial profit target is at $118.81 for Facebook. We bought it around $101, and you would sell half at $118. Now, you would only buy another long-term position if two things: if a signal was given and the actual long-term signal was above $118.81. Okay, all this above information is given in the expert commentary for each trading period, and you can also pick up all these signals in the exploration, which we'll go through later. If you have a look at your stop, you can see that the grey solid line is the long-term trailing stop, and that's where your stop loss would be. So all this is detailed in the Expert Advisor commentary and in the user-friendly manual, and I suggest that in the manual, how to select securities on a technical basis for superior performance is read, and this will definitely improve your trading results. The website also identifies, my website also identifies securities with characteristics that have superior performance on a fundamental basis. And when you combine the information that I'll present in this webinar and you use the system, you really will have a significant competitive advantage in the stock market. Here is an example of the different stops, of the different trailing stops. Before, we just showed you a long-term trailing stop. On the left is a blue solid line, is the short-term bullish trailing stop, where you would have invested 17% of your security allocation, in that example $1,700, and your brown solid line is the medium-term bullish trailing stop, which is 33% of your security allocation, and the grey solid line is your long-term bullish trailing stop, which is 50% of your security allocation. Now, looking on the right-hand side, you can see those are all red signals. That's when you would short sell, and the same security allocations on place, except you will notice that all the short sell trailing stops, they're the same color, and but they are dashed. So the same principles apply for the security allocations for short selling. Where would you start off? Well, let's assume you haven't got any securities that you're following. Well, then what you do is basically you'd run an exploration, or if you've got just your favorite securities that you've selected on a fundamental basis or on a technical basis, then you would basically use those securities and go through them, run the exploration on them, or just go through using the Expert Advisor. But a good starting point off is to look for new securities for analysis is to run the exploration. Here there's two explorations. There's a bullish and there's a bearish. I'm running both here, and the system is designed for end of day use, so we're running this on an end of day basis. But having said that, you can use other time frames subject to your own testing and validation of the results, successful validation of your results. If coming back to the exploration, you can see that it took about 2 minutes to run the end of day exploration on the SP500. And let's have a look what we got. Here, what I would like to show you in the exploration is there's a long-term, medium-term, and short-term status, which tells you how strong the share is, as in trend strength. And then you can see there's negative numbers and there's anything above zero. Anything above zero is positive or true or has value. Anything below is to be ignored. Now in this example with Facebook, we can see on the 10th of February 2016 there was a long-term status was true, it was positive, and the medium-term status was positive, and the short-term status was not. We have you also with a long-term buy signal, which we've got here because it's above zero. You do want to buy on weakness. You want the trend, the long-term trend, to be intact, but you actually want to buy on weakness. So here you can there's a long-term buy stop of $80.11 for Facebook, and there's a long-term profit target of $118.81, and here it's trading at $101. There's some more information to the right. I'm not going to go through the rest of the information now because it's very well detailed in the manual, and just from time constraint point of view, I'll leave it at that. But yeah, let's look at the next screen and have a look at you know, what would happen with those values, how they would be shown in the expert advisor. Now coming back to this $118, that's your where you would sell half of your position at that initial profit target. So here we've got the expert advisor commentary. On the top, it gives the trend status. The long term was bullish and the medium term was bullish, as was shown in the exploration. And you can see that the short term was short-term correction. It shows the exact same results as the exploration. It says there's a new long-term buy signal. The initial stop value was $80.11 and the profit target $118.81. And if there were any medium trades and short-term trades, it would give the status at that point in time. And don't forget here, the expert advisor commentary marker would be over here on the 10th of February. That's what it's referring to. And short sell trades, it gives the position of the short sell trades, if there are any, etc. As you can see, there are none. All this is detailed on the right. All the money management rules, etc., are detailed below on the right here as well. So coming back to our Facebook example, we bought on the 10th of February. You'll notice on top, I've said the initial stop is the initial stop is based off the exploration, and the next day onwards, the ongoing trailing stop is based off the expert advisor stop loss, which factors in volatility history into the stop loss level. The exploration does use volatility to calculate the stop loss, but it uses less volatility history than the expert advisor, and often they're the same but not always. In the grand scheme of things, this is actually insignificant, because what you would do when it does happen about 10% of the time, there's a slight difference. You can really use any value, because the next day that you look at the expert advisor, the value is going to adjust from $80.11 up to roughly $84.67, which I'll show you if we page forward the next day, if we move forward the next day. So let's do that, and there you can see on the 11th of February, our buy stop value is at $84.64. So I just wanted to point that out. It's a small idiosyncrasy, but in the grand scheme of things, it's insignificant. And from a practical point of view, what you would do is just take the stop that is closest to the price. Okay, so as I mentioned previously, ways to improve your trading results. If you're looking purely from a technical basis, look for securities that have made lifetime highs. The share price that are often at all historic highs before a long-term buy signal given is usually a very good candidate. Securities that are making multi-year highs in the last few months before the long-term buy signal, and shares that have a strong relative strength for a minimum of 6 months before the long-term buy signal is given. And then you can also look for, shares showing good strong relative strength, and the industries themselves in turn are showing good strong relative strength. So if you complete technicalist and you don't look at fundamentals, I would certainly concentrate on these factors. Okay, so when I was preparing the presentation, I actually just thought about that time, let's have a look at a few company profit warnings. We will get into, you'll see we'll do some company profit warnings and some liquidations, and then we'll do some profit upgrades and announcements and some bullish stocks. But I thought, let me just have a look at how the actual system was basically interacting with the news coming out. And here we can see in April the 27th, Apple had the shares plunged 7% on our sales drop. It's a drop in our sales. And here you can see on the 27th of April, you can see the gap. The long-term trend status at the bottom is red, so it's bearish. We would not have been doing any buying because it's bearish. You can't do any buying when the long-term trend status is bearish. And you can see that there were actually some long-term short sell signals given and some other short sell signals given actually before this profit warning. Then let's look at Mitsubishi Motors, and they had some fuel dodgy testing results, and the same thing, the share was trending down, and you can see that the long-term trend status is bearish, and the big drop in price when the actual claim went, the false fuel claims went public. We look at Murray Goulburn, that's a dairy producer listed on the Australian Stock Exchange, and same story. A huge drop from $2.25 down to just over $1.30, and the long-term trend status was also bearish. Let's have a look at Atlas Iron Ore, and let me say I don't get any pleasure out of any security going into liquidation, but the reality is the share price is going to drop anyway, so you actually might as well take advantage of it, and look, we are here to make money. So that's what it's about. So Atlas Iron Ore, listed in Australia 1 year before declaring bankruptcy. Look, if you could say some people were actually bullish at some, or contrarian, and might have wanted to buy here. But the thing is here, where do you buy? Let's assume it's bearish. Let's just assume that. Where do you short sell? How much do you short sell? When do you short sell? When do you exit? When do you add to your existing positions, etc., etc.? So this is all handled for you in the actual system. Here we've added in the short sell signals. You can see that there were some long-term short sell and short-term short sell signals. That is a bit congested, but in the actual chart you can expand that, and you can see on every day with the expert advisor exactly what signals given and how many signals are given, because often when there's a long-term short sell underneath that symbol, there could be a medium or short-term short sell as well. Anyway, let's have a look at the next screen, and there you can see we've added in the stops. Now the blue dashed line is the short-term short sell stop, and the gray dashed line is the long-term short sell stop. So there you can see how we would have done. We were stopped out, for example, there, short sold, and let's see how, and then basically carried on. We did it for a year before we went to liquidation in April. So let's see how that would have fared with an Excel spreadsheet. With a $10,000 security allocation on the 1st of April 2014, there was a short-term signal, a short sell at 98 cents, and we bought 1,717, or sorry, no, we didn't buy, we short sold 1,717 Atlas Iron Ore, and that gave us a 17% of a security allocation. Now, I just want to point out that what's important is to look at the right-hand column, which is actually the profit and loss column. Really, this is just money going in, money going in, and money going out of your account. So here we took a loss on our first transaction. Then there was a long-term short sell. Now, we short sold at 99 cents, and we took profits at our initial profit target, where we sold half. It's 2,500 securities, half, and here we can see we made a profit of $550. Now, what is very important is to see that we let our profits run, and this on the second leg, and that's a big strength of the system. And there we made $2,193 by letting that second leg of the position run. Then we had on the 14th of April a short-term signal. Same situation, 99 cents. We took half the profit at 90 cents for a $77 profit, and we were stopped out at 66 cents. 22nd of August, short sold again at 63 cents, and we took profit, our initial profit target, and then we were stopped out. Now, following what I would like to point out is we only add to our positions. In this case, we're short selling, so it's below. When the short sell position is below our previous profit target. And anyway, so forth and so on. And I factored in 10% investment in Marc Belnick's Bullish-Buy and Bearish-Sell annual subscription, which is $950 a year. So I factored in $95 and brokerage at $21. And 25 cents, and there we made an approximate 34% annual return on that security that actually went into liquidation by short selling. On the next screen, you can see this is a Reutersikon screen, and I suggest that that you get the Reutersikon package. There's a lot of useful information, and one of the you can speak to Hunter and the MetaStock team afterwards. What I find very useful is the analyst recommendations and the analyst forecasts. So what I actually did here was take Atlas Iron Ore and compare it against the analyst recommendations. Now, having said that, when it comes to shares falling, often the bad news is concealed by management and directors. It's just the way it is, you know. Good news has 1,000 fathers, but bad news is always concealed. And when the mud hits the fan, it's often too late, and the shares just plunged or dropped severely. And you can actually see this in this example here. You can see this because in April 14, we were actually issuing short signals, and we had a bearish long-term trend. And yet you had the analysts, there were 19 analysts, and 9 of them were actually bullish. They had a strong buy, or they had a strong buy or buy, and 7 were a hold, 1 was a sell, and 1 was a strong sell. So basically the system was actually a step ahead of these analysts. And you can see as time went on, you know, you can see the orange line is the share price, and the yellow dashed line is the target price. So we would have been better off following the system here than actually listening to these analyst recommendations. Excuse me, a sip of water. Okay, and then SunEdison was quoted on the New York Stock Exchange, files for bankruptcy. Same story. When do you short sell, how much do you short sell, etc. Having said that, if we look at the from March onwards, it actually was bullish. I mean, it was trending up. So here we've got a situation where we were bullish just on a technical basis, and then we would have been bearish at some stage. And let's see what the signals show. There you can see in February over here, there was a medium-term buy. Then we had a short-term buy and another short-term buy followed from a short-term short sell, and they were all short-term short sells. The system does not give long-term and medium-term signals all the time. When there's a sharp drop or a sharp rise, and that you might only get some short-term signals. However, about 80 to 90% of the time, you do get the long-term trading signals, and you do long-term trading and medium-term trading signals. So let's have a look at SunEdison with the stops. There we bought our medium-term position. We would have sold half around here, an initial profit target. We were stopped out there. Same with the short-term buy. We would have sold half an initial profit target, stopped out, bought half. Yeah, we did reach the initial profit target. I'll show you later. The next slide. Sold half, we sold, were stopped out, and so forth. Here we started to short sell. Nice profit run, stopped out. There we had a short sell, actually just stopped out, and there we had a short sell and made some money over there. So translating that into the spreadsheet, I'll just go through the buy. On the 4th of February, there was a medium-term buy at $20.27. We bought $3,300 worth because it's medium-term signals are 33% of our security allocation, which is $10,000. And on our first leg, we made that profit, and then we stopped out on there, and so on. And there we go, and you can see that what we made on SunEdison was approximate 14% annual return after factoring brokerage at $21.25 per broker's note, and $95 for the system. And you can see I annualized it. I took it from February to April, so I just annualized it. That's why that figure of $1,725 has been reduced to a 14% return. Same similar story of SunEdison with the Analyst Recommendations on the left-hand side. And another example of a short sell was African Bank, listed on the JSE. What I just want to bring home is obviously you can use the system on any security, on any exchange. And here you can see same story, when you short sell, how much, when you take profits, etc. And let's have a look at what happened with African Bank. Yeah, we decided in this example that we just wanted to cut down our brokerage costs, so we wanted to take all medium-term and short sell signals. And here you can see the first long-term short sell was given on the 15th of January, which corresponds with the expert advisor commentary. You can see the long-term trend is bearish, and you can see it says a new long-term short sell signal, the initial stop value at 27 Rand and 34 cents, and the profit target at 19 Rand and 93 cents. We never took the second long-term signal because our profit target wasn't reached yet. It nearly was, but it wasn't. And you can also see that the blue corresponding dashed line with the short-term blue signals. I've actually changed, as you might have noticed, I've actually changed the colors. You can change the symbol colors just to show you how the signals correspond with the actual trailing stop losses. These should all be red, but I've changed them to blue to correspond with the blue short-term trailing stop, and brown for medium-term, and grey for long-term. And it just gives you a better view. So looking at African Bank, how did we do? If we put that into a spreadsheet, just taking the long-term and medium-term short sell signals, well, we made 17% annual return on 10,000 Rand. So what I also want to point out is that your risk is pretty well controlled with the stops. So when you see the returns of 17%, you've got to look at the return with the amount of risk that you are taking as well. Finally, okay, so we get into some bullish examples, and here we're looking at Facebook. If we look at the actual chart of Facebook, it's bullish, but the long-term trend status is bullish. You can actually see that It's a kind of security that's basically 3 steps up, 2 steps down, 3 steps up, 2 steps down. So looking at Facebook, we didn't do too well on the short-term signals. We took them because that's the default strategy, is to take all the signals with the recommended security allocation percentages. And here you can see with Facebook, on the 8th of May, there was a long-term signal. We bought at $78. That was $5,000 worth, or 50% of our security allocation, and we sold half at $86.56. And there we were hit with the trailing stop loss. So in other words, the candle chart, well, there you can shows it. There you can see we were actually stopped out. Then on the 3rd of June, there was a medium-term signal. We bought $3,300 worth, and we sold half on the initial profit target, and then our trailing stop was hit, and so on. And with Facebook, we actually made 7% annual return after factoring brokerage and costs. And yeah, it won't knock your socks off, but the risk is pretty well controlled. And also, I'm going to show you later on some different investment models that move away just from the default strategy and look at just using the long-term trading signals. So once we're at Facebook, and just to point here, yeah, you can see the analyst recommendations. They're all bullish. I think there's one sell and one analyst who's got a hold recommendation out of, well, 51 analysts. And usually during the main trend, or during most of the trend, everyone's correct, but always remember at the terminal points, at the extreme points, then that's when most people are incorrect. So here you can see that that's the target price that analysts have got. Whether it will reach it or not is another story, but you know, always remember, no matter how bullish the analysts are, to use your stops. Here's an example of a health insurer listed on the ASX, Australian Stock Exchange, and you don't have to use candle charts. There are different templates that come with the actual add-on where you can use a closing light chart. So I want to also bring that to attention, and also you can see the earnings have been increasing at the end of every year, and the share price has been pretty bullish. The grey line is the long-term bullish trailing stop. And there was actually a profit announcement on the 21st of April 2016, and you can see that here with the news. You know, NAB, that's its health insurer name, has hit a new share price record after upgrading its profit guidance weeks after its annual premium increases kicked in. So that's the a bullish example, and here we have just with the analyst recommendations as well, and you can see the profit announcement basically over here on the 21st of April. So you can see that the actual trend was in sync with the profit announcement, the long-term trend. Having a look at Blackmores, what I want to point out with Blackmores is, remember I was saying to you that the short-term signals at times with a security that sort of moves in a broad sideways range, 3 steps up, 2 down, that it's not actually going to perform that well with the short-term signals. Well, when the stock is volatile, so let's just go back to short sell example, and it's dropping like a rock, you're going to do well off your short sell signals. And here with Blackmores, there was sort of just a whole raft of good news coming. One profit announcement followed by another, followed by sales increase, followed by another good announcement to the market, and you could see that it just took off like a rocket from $25 all the way up to $220. Blackmores sells vitamins, and what that was really caused from, a catalyst for that is a lot of the there was a lot of export to China. There were a lot of people buying Chinese buying vitamins in Australia and then going and selling it in China. So that was one catalyst that moved the share price up so strongly. But anyway, if we have a look, you got the short-term buy signal, and here at 1 you bought at $35.85 and you sold at 72. So you actually would have made not 100% profit, because remember you would have sold half at around here, but you would have made, let's say, 50% profit on that 17% security allocation. So on the $1,700 that you invested, you would have made about $950, half plus that profit on your first initial profit target. And the same with the second purchase, the short-term buy signal at $90.44, and here you were actually only stopped out at $192. So you did well. You did pretty well, making something in the order of 19% on the security just off those two short-term signals. Okay, so it's all good and it's all dandy when things are trending, and that's what the system is about. It's about how to identify securities that are trending. You don't want to be stuck in a security that is actually in a sideways trading range. And here you can see we're looking at Ramsey Healthcare. It was trending beautifully, and then it started to go into a sideways trading range. Now when the security moves into a sideways trading range, it does take a bit of time before you know it's in a sideways trading range. But here you can see there were long-term buy signals given by long-term short sell signals. You can see that there was double tops and double bottoms being made, that the relative strength started to taper off. And what you want to do is then draw a trend line from the top and bottom, and only buy 10% above the high price, so that in this way you'll know that the stock is trending again. So you would have gone long at $73.70 and you would have gone short below $50.40. With securities below $2 you can probably, or very volatile securities, you can change that percentage to 15%. So let's have a look at another example. Here we have CSL. Now CSL basically was trending from 2005 all the way to 2007, and with the GFC, the onset of the GFC from 2007 to 2012, it was just in a broad sideways trading range. You might get a signal and take half your profits and then sort of break even, but your money can be used better elsewhere. And here the same situation, you only want to buy above $41.80 where the green line is, and you want to go short below this red line. So that will keep you out of the trending ranges. You only want to, that will be the sideways trending ranges. Okay, some reasons why you may choose your own investment strategy. Not every investor has the same risk-return profile and investment objectives. You're all at different stages of your life, and you need to be comfortable with your investment style. In certain countries, you might have a broker that advises you, and you can use a system with a broker, but just look at taking the long-term signals and medium-term signals. The cost of brokerage rates is a factor. Your investment portfolio size may dictate your strategy. If you've got a small portfolio, it is better to start off with the long-term trading signals only, and then as your portfolio grows, you can include the other signals. You need to consider your tax implications. For example, in Australia, you get a 50% discount on your tax payable if you buy and hold a security for longer than a year. So in that case, you would maybe, if you had it for 11 months and 25 days, or whatever, 20 days, you would maybe want to hedge your security if it was there was a short sell signal, so you could gain the tax advantage. You also need to consider how much time you have to manage your positions. The long-term positions and medium-term, you don't need much time to adjust the stops, but the shorter-term positions you do need to look at more frequently. And also you can integrate your fundamental research with the long-term signals given. It works extremely well, and you may wish to hedge your existing positions. The main thing is to always review your financial objectives and to make sure that you've got a strategy and that you stick to your strategy and that you're consistent, methodical, and disciplined. And that's the best way how to go for long-term success. So looking at Ramsey Healthcare, we've got the default strategy, number 1. That's to follow all signals given and money management rules as detailed in the webinar what I've just spoken about. There you can see Ramsey. Again, we're using that to just show the different investment strategies and different investment models. Now if we look at one here, what you could do, if you've still got a $10,000 security allocation, you could actually buy $10,000 worth and hold it until your long-term trailing stop was hit, which was hit at $57.12 all the way up here. You would have done very well out of it and collected some dividends, and that's just the strategy of almost buying a good security that's fundamentally sound, that's trending, and selling it when your stop loss is hit. But I also want to point out, and which I advocate strongly, is that at point 1 you could create a free investment. Now what I mean free investment is once you've sold half, you sell half your securities and you keep the rest of your securities. That does depend, I believe, in my opinion, on a fundamental analysis. You've got to know if the security is cyclical, if it's going to still be a good performer to the future, if it's going to yield good returns, etc. But anyway, you can actually sell half and put the bottom in, put the rest in your bottom drawer, and keep it for the grandchildren and etc. Or keep it for a rainy day one day. So that is the option that you've got with this strategy as well. If you're not bullish on it anymore, then you just take all your profits at point 1. Okay, that Ramsey Healthcare, a pyramid example with significantly reduced risk. Okay, so what we're doing is here we're buying at our long-term buy positions, and we're buying when there's another long-term buy position, as long as the long-term position stop loss level is above the previous long-term buy price. So here if you go down to point 2, you can see the grey bullish stop loss level, and that is above number 1. And that's why you would buy at number 2, and you would buy at number 3 another $10,000, and number 4 another $10,000, and number 5 at $10,000. Now, having said that, you actually wouldn't actually want to have 50% of your portfolio value in one security, but it is possible, and you might only want to go up to 20% of your security portfolio. So there you can see that you would have actually, you could have stopped it at number 2. And had you done that, you would have made bought at 1, 2, 3, 4, and 5, you would have made 164% return by doing that with your risk very well controlled. And there are a lot of combinations and options that you can actually take. So even looking at Ramsey again, just to be consistent and use the same example, you do exactly as you did before, investment strategy number 3, except you sell half at your initial profit target. And you keep on doing that, and that even further reduces your risk. So you can even devise your own strategy using the long-term stop and the long-term buy positions. Right, looking at a hedging example, here basically you would hedge when the long-term trend is bearish. You would get a long-term short sell signal, and you would sell over here. Now you must probably thinking, well, where's the stop? I will show you the stop later to see how it fared. And there are different forms of hedging. Depends, you've got to identify why you're hedging. What's the reason that you're hedging for, or you're just short selling? Is it just a naked short sell? Because if you want to you're still bullish on the security, you might even just do the perfect hedge, which is just sell 50% and then want to buy back later on when it's bullish, or you want to sell your whole position. You've just got to identify what you want to do. the system gives you the tools to do it. And there we have the long-term. The grey dashed line is the long-term short sell trailing stop loss, and you wouldn't have been stopped outright towards the end. So you would have done well to hedge your position here. Okay, so the summary of the investment strategies. There's the default strategy, which is take all the signals and use the given money management rules. You can buy your full security allocation for your long-term position and hold until the stop loss is hit, or you can pyramid with the long-term positions with significantly reduced risk. And remember, this has to suit your risk-return profile. And then you also can create your own investment strategy using the long-term buy signals and long-term stop loss indicator with your own money management rules. For example, we pyramided with the long-term buy positions with significantly reduced risk. And that was only by investing in additional long-term positions when the new long-term position stop loss level was above the previous long-term buy price. Now you can also use the strategies 1 to 4 above to short sell, and the hedging strategy, you can use the long-term short sell signal and the long-term short sell trailing stop. Let's look at some charts on a long-term basis. We were looking there at them on short-term basis, at a short-term basis. Here we have Aspen Pharmaceuticals listed on the JSE, much better than what African Bank did. And here you can see the opportunities by using the long-term signals to create free investments using the long-term buy signals and the long-term trailing stops. Here was a perfect time to create long-term, to create free investments over there and over there. If you have a look here, it is very condensed because the share price is, has gone up considerably, and there's a story within a story here, and I will show an example of that later on. There we can see CSL, which we saw previously. I haven't put the long-term bullish trailing stop, so we'll see in the next slide how you would have done. But once again, you could have created free investments over here, and over here. Well, here you would have not really created a free investment. You would have had a great opportunity over there. There you probably just would have been stopped out, just shy of creating a free investment. That's, in other words, 100% return where you sell half. So here you have a CSL again with the long-term bullish trailing stop. Apple, all signals since 1981. So as I said, there's a story within a story here. Let's go quickly have a look at 1986. And I'm choosing this period from June 1986 to October 1987 because that was includes the October crash. That was Black Monday, Monday the 19th of October. For those of you sort of my vintage, you can remember it. And let's have a look at example how we would have done. So we're going back almost 30 years. And we're going to have a look at how we would have done following the default system, and well, that I suppose gives it away. A 45% return was made. But let's have a look at the Excel spreadsheet and see what all the signals would have done. This black line over here, it's just we were in a, if you recall, it was in a sideways trending range, although it was very condensed, and that's why I started from June 1986 following the signals, and you can see here we were stopped out, and then we started taking the other signals as per the default strategy rules. And there we have Apple following all those signals from June 1986 right through to the October crash. So to the 20th of October 1987, where we were stopped out, and there all the actual security allocations, just as we've done in the default strategy, etc. And we would have made actually through the crash. Here you can see we would have been stopped out of our short-term positions below the blue solid line, the medium-term position, and below the brown solid line, and the long-term position below the grey solid line, and we would have actually made ourselves there a 45% annual return. And also remembering that we, for example, just looking at this short-term buy signal, we only would have invested in an additional position, short-term position, if our profit target, if we were buying above our previous profit target. So we're buying at 120 because it was above our previous profit target of 81 cents of the short-term signal. So when I talk about buying above the previous profit target, it's of the same term. In other words, if you have another medium-term signal, it's got to be above the medium-term profit target, and long-term above the long-term profit target. Okay, there's a bit of reminisce a bit, and a bit of there's the Wall Street crash that was on the October the 20th, the Tuesday. Dow falls 508 points, crash horror, etc. And yeah, it wasn't a pleasant time for people caught up in that crash. And there we have looking at Apple. Let's go back and say, well, okay, the same period, June 1986, and we took, going back to investment scenario 2, where we actually bought a long-term position of $10,000 at 56 cents, $10,000 at 56 cents, and we wanted to sell half at $1.19 in October 97. So how would we have done? Okay, if we fast forward, let's see how we would have done. Okay, when I mean fast forward today, so you would have put that in your bottom drawer. Well, there you can see Apple. So we're looking here in 1986. We created that free investment by only selling half. And here we have a history of all Apple dividends and all the stock splits. So what we would have done is we would have made, coming back to this Apple example, to the figures, we would have made $834 in capital appreciation on that free investment, and we would have made well over $279,000 in dividends. Now there's more to this, which just stay tuned. I'll tell you about that a little bit later on. So yeah, that free investment was very beneficial. You know, even if it did half as well as it did, you still would have done extremely well, and that's another good reason why you should create you should always create free investments. It's almost, this is the holy grail to wealth accumulation. It isn't one technical analysis signal or you know, a technique. That is, it's money management, and this is one example, one strategy to accumulate wealth. You know, is to buy right and to let the free investment let the free investment grow and nurture with time. So to summarize, the system continuously forms of the long-term, medium-term, and short-term trend status for every security on every global exchange. If it's bullish, you buy and take all exit signals. If it's bearish, you sell and take all exit signals. All your long-term, medium-term, and short-term buy signals are actually given to you with the exact position size to invest. And usually what you'll find, successful short-term positions last from a few days to a few weeks, and successful medium-term from a few weeks to a few months, and long-term from a few months to a few years. Now you can very effectively use the long-term entry and as stop losses for choosing different investment strategies or investment models to suit your risk-return profile and investment objectives. And remember, you can short sell as well. You get all buy and sell, entry and exit prices, and every position has a dynamic trailing stop. Now, with the default strategy, what really makes the system stand out and is that the money management rules, the 3 rules of that's integrated into the system of only selling half, using the security allocation percentages, and also really enhances the system. So in other words, you know, selling half your position and letting your other half of your profits run, only invest in additional positions when they're above your previous profit target, and investing the correct security, the correct amount with each security, with each signal, really does boost your performance and gives you a very good risk-adjusted return. Okay, the system will remove all emotion and gut-wrenching decisions from your trading and save you heaps of time by always knowing exactly when to invest and how much to invest and when to exit. The technical system combines 30 years of knowledge, practical trading and academic experience combined with effective investment strategies, giving you the edge in the market. So the system comes with the following components: a comprehensive user-friendly manual, 2 explorations, a bullish and a bearish, 2 expert advisors, one with alerts, 5 templates. Now you'll have your candle chart with all the signals and a closing light chart with all the signals, and then you have a candle chart with the signals and all the bullish trailing stops, candle chart with all bearish trailing stops, and you have a candle chart with all bullish and bearish trailing stops. And also got 16 custom stop loss indicators, which are all your trailing stops, which you can add or delete individually. And remember that support is available from MetaStock and Marc Belnick. And what you've got to factor in is the system a cost or investment, just as is an education a cost or investment? And you've got to say, well, you know, what is the cost of doing nothing? What is the cost of making a mistake that should not be made? And what is the cost of having not having effective stop loss? What is the cost of a lost opportunity like Apple, which I've only showed you half the story, which I'll show you later on? What is the cost of having an emotional strategy, and also including the time and stress involved of drawing trend lines, etc., and you just don't know what to do sometimes. What is the cost of not having an effective money management strategy? How much is peace of mind worth? And I say that because all your positions are protected with your stop losses, and always remember, focus on the return after the investment. So coming back to Apple, if we had paid $950 for the 30 years, it would have only been 2% of the money that we would have made off here on that example where we made $834,000 and $279,000 in dividends. And I said I will come back to that because I said well over $279,000 in dividends. And you can see that this is the dividend. We factored in the stock splits were factored into the price, but sorry, let me say that the price was adjusted for the stock being split, but not the amount of securities. So when we bought Apple, 10,000 worth, we had 17,858. This is going back to that July 31st or June 31st example. On July 31st, we would have we bought 7. Then there was a stock split on May the 15th when we still held the security. Our securities went up to 35,000. We sold half to create our free investment. There was a 2-for-1 stock split in 2000. Then again there was a 2-for-1 in February, and then there was a 7-for-1 stock split in 2014. So having a look at our dividends here, there was a dividend, the last dividend was April the 26th, paid 57 cents. Sorry about that. April 57 cents. You got 500,000 securities from your free investment and receiving a dividend of 57 cents per quarter, or roughly per quarter. It was 52 in the previous quarter. So you would have received in the last year $1 million in dividends from that free investment. So guys, to me, that is just the name of the game. And that was what I said that I'll talk to you about Apple later on. Some free useful websites that you can look at later because you can review this webinar again. And let's have some, I'd like to, Hunter, if I can, open the floor because we've got some stock market trivia. What was the first stock exchange? Anyone know? Okay, any answers?
So we'll just wait for if anyone types in the chat box, I'll let you know.
Okay, I'll carry on because we actually a little limited for time.
Trey has answered London.
Okay, okay. Let's see. We'll see on the next page what the answers are. If it's correct, I would have said it's correct. Okay, so no. A good guess, but no. On the New York Stock Exchange, which company has the code V? Okay. Anyone?
Visa?
Yep. Well done. What share on the Johannesburg Stock Exchange has paid a dividend each and every year since listing from 1897 to 2015? Okay. And what was the first security to list on the New York Stock Exchange? Okay, let's see the answers. Okay, it was the Amsterdam Stock Exchange, formed in 1602. Visa, someone rightfully said, well done. And South African Breweries was the security. And to that I say cheers. And if you had bought SA Breweries, how many times has that stock doubled and doubled and doubled and doubled and doubled again? Or how many times could you have created free investments and you would have got a dividend each and every single year? And what was the first security on the New York? Well, that was the Bank of New York in 1792. For those of you who want to leave, I just want to say thank you for your time. Just once again, sorry for that little mishap in the beginning. We did test everything, and it was perfect, and then it just went to mute afterwards. I really don't know what happened there. So it was no fault sort of of our own of not testing. Anyway, I thank you for understanding. And thank you so much, whatever you wish to do, whatever, path you take. I wish you lots of good health, happiness, and trading, investing success for the future. Please don't forget to look at my website for special webinar deals and how to invest more effectively. This webinar has been recorded and you can view it again. From a time point of view, I did maybe rush a few things, so forgive me for that. Apologies. But I will be open to questions after this, and you can always look at the webinar again, and please send it to any interested party. And thank you very much. So questions are now going to follow.
Now, as you guys are typing in any questions that you might have, I wanted to say that since this webinar is, or rather this add-on is pretty new to us, and we're actually very excited about it. A big part of that is the money management aspect of it. But we will be offering a promotion for this add-on. Now, normally the add-on is $99 a month, but what I want to do is give you guys the opportunity to really test drive this add-on. So what we would actually do is give you 3 months of the add-on just for the price of one. So it'd be $99 total for 3 months of Marc Belnick's Bullish-Buy, Bearish-Sell, which is one of our newest add-ons, and again, we're very excited to have it. Please let us know if you want to take advantage. I'll put our contact information up here on the screen in just a moment. But also, if you guys have any questions, go ahead and type them in the chat box now. It doesn't look like we have anything so far. Like Mark said, this will be recorded and sent out to you guys as well, so that you can review it. If you have any questions, please reach out to us, metastock.com/sales chat, or visit Marc Belnick's website. Very extensive, a lot of training behind this, and a lot of support. One of the things that gets overlooked is really the expert advisor, and then within this system, it's very robust. It's very extensive. It is a very simple system to use, but providing that very thorough explanation behind the methodology is also very important. And I think that Mark's done a wonderful job with that in integrating in his expert advisor. So it doesn't look like we have any questions. Mark, do you have anything, any last words, anything else you want to add?
No, just want to. I don't know if hopefully I explained it well enough that there are no questions. Just wish you all the best, and You can always email me if you've got any questions on my get hold of me through my website. And just thank you for attending, and wherever you are, enjoy the rest of your day or evening or morning. And thank you so much for attending. All the best.
Wonderful. Thanks again, Mark. We're excited to do more of these webinars here in the future. Thank you for attending this webinar, and please reach out to us if you do have any questions. Otherwise, as always, happy trading.